Welcome to the New Barbarians podcast. I'm Bill Mann.
And I'm Mark Connors. We're here to deliver insights on how current market events impact the traditional investment portfolios of stocks and bonds that Bill and I traded on Wall Street. Today, we see digital assets as the next frontier for finance and investment.
We're also here to explain how cutting-edge tools like AI and disruptive tech are the new barbarians at the TradFi gate.
So instead of Mike Milliken's innovation on debt financing with junk bonds, today's barbarians at the gate are changing the landscape almost daily across regulation, legislation, and finance.
So hit the subscribe button and let's cut through the noise together. Hello, everyone. This is episode 41 of the New Barbarians podcast. Today's Thursday, October 30th, 2025. The podcast will hopefully hit the platforms this week.
Mischief night, Bill. Mischief night. Let's go.
Mischief night is tonight, or is that the day before Halloween?
No?
Yeah,
That's it. Day before Halloween tonight. Let's go.
Yeah.
Make some
So
mischief.
if you need to TP anyone's houses or egg their houses today, tonight's the night to do it.
Nights.
Of course, tomorrow's Friday. Halloween's on a Friday, which should be fun for everyone. Anyway, we have a title for today's podcast because it's just Mark and I. It's Finding Alpha in the Cracks of a De-dollarizing World. So we're just going to be catching up about some crazy things we're observing. And I guess I'll kick it off by just saying Agentic AI is taking off, and we'll have a bunch of observations about that. And I like to contextualize AI right now as agentic AI. It's this new phase. And I'm more excited than ever that I embraced this during my year off. You know, I had my non-compete year after leaving Two Sigma and started jumping in. And
Dude,
in
Bill,
last
that's
year,
that thing. Doors close and windows open, right? Two
yeah,
Sigma, bye-bye. You were there for how long?
about 8 years. Yeah. And, you know, so I knew a lot about AI early on, and Gen AI, of course, is what people are typically referring to, you know, when it comes to AI now. And that is clearly like the genesis for a lot of the new boom. But I never could have anticipated, knowing everything I know about AI, even leading to this moment, I couldn't have anticipated that it would take off this much. So with these massive AI platforms, OpenAI, ChatGPT, Google Gemini, Anthropic Claude, and Perplexity. And then, you know, don't forget about Grok, which is like number 2 now. I actually don't access Grok as much because I'm not as much of a Twitter user. But, you know, you can access all of these things pretty easily from websites and apps. But then you can programmatically access all of them now with agents, and you can build them into your
All
whole
right.
workflow. And it's just
Bill,
nuts.
walk it back to like Excel. Is there an Excel analog going from the AI prompt window, which is a browser on steroids, and people are like, this is great. I ask it a question, it's much better. So going from that to choosing what LLM is behind that window. So we went from AI, the prompt, LLM, whatever that is, and then agentic. So can you walk those three things versus like Excel macros or some other kind of process we're used to on the evolutionary scale?
Yeah, actually, that's a great idea and gives me the opportunity to illustrate how old I am. So, my first, like when I got promoted from the mailroom to like an internship
Is
in
that true?
college. Sorry, yeah. I was in the mailroom from the summer after high school, and then the summer after freshman year, and then the summer after sophomore year, I went upstairs and I started working in the accounting department. And the first thing I did at this corporation, this, you know, public company, was upgrade Excel spreadsheets from this other program called Lotus Notes. And so from Lotus
Lotus.
spreadsheets. And then there
One,
was
two,
also
three.
an email system called Lotus Notes, which yet again is artifact of, you know, the 90s. But I was upgrading, you know, all these legacy systems to Microsoft Excel. And, you know, there were people who were like, oh no, I hate Excel. I like Lotus, you know, because they had become so accustomed to it. So it's like every new tech implementation. And these were people who had used calculators, and, you know, Lotus Notes like saved their lives for like a decade. And then they were like, no, not a new thing. But anyway, so I became an Excel junkie, and like anyone on Wall Street that's gone through banking and stuff like that, like one of the old ways to measure someone's prowess is like how often did you touch the mouse? You know, if you could execute all of your Excel commands with the keyboard,
Keyboard, yeah.
you had been, you know, trained adequately. And so, you know, we actually can draw some proxies for things that I learned over the years. Excel VBA is really like the coding language of Excel. So if Excel functionality couldn't solve your problem, you would go into like the back end and come up with, code to actually execute what you needed. There were macro writers that were eventually built into Excel that could actually write that for you. So the original Chat GPT access method in like November 2022 was really like API. There was maybe a chat window and prompting, you could get amazing feedback compared to anything else that was out there, but you still had to be a pretty decent like engineering type to really access these tools and incorporate it into your like business. So that's going from like a web-based window to, you know, pulling something into your business. Like early on in November 2022, you could start swapping out these like legacy, very onerous, big, expensive natural language processing tools. And you could start swapping out to this like programmatic access with ChatGPT. And if you
So
were like,
is that so my Excel, Lotus, you have a cell, you go in, you say equals, average, a range, and I'm controlling it through one window. That's my prompt, is that Excel cell. And then if you want to soup it up, you could actually create VBA if you weren't happy with the canned formulas on the bar. So you could do that. And then from that, you could create a macro. And then eventually there was an API process that is more about data and not the algorithm. So is there any analog to the agentic process? Because macro is more formulaic, advancement, but not a 0 to 1.
yeah, I think so. Macros are a decent proxy because a macro can do like multiple steps of a workflow.
Okay.
And, like, I think just personally, like advancing from creating your own spreadsheets to then like pivot tables and things that were very powerful at like summarizing a bunch of data and deriving insights. So maybe a combination of pivot tables and macros would be like a single agent type of thing. But the agents in the AI world are also intelligent. So you can ask it to write a macro that reads the latest version of your pivot table that, derives insights and provides you with like high value insights. And then you can ask it to interpret the results, compare it to the previous ones, and then spit something out. And
Yeah.
then, you daisy chain these agents to actually just perform like one specific thing and do it very well and do it with high confidence and deterministic outcomes. So, like, the
All
one
right.
mistake
So
you
right
can make.
there, that's
Yeah.
that's huge because that's the part that everyone is talking about is auditing the process. I've done it. I've said, "Hey, what about the tariffs?" And they're like, "Yeah, the tariffs that started in June of 25." I'm like, "No, no, it was April." They're like, "Oh, yeah, you're right. It was April." So you're saying that you can set up a process where you have an assembly line of checks and balances, whether it's multiple LLMs or something, to help increase the veracity of the output?
Yeah. Yeah.
'Cause it's
And
not
I'm trying to
deterministic like the our old days were more iterative and deterministic. We knew the data we were getting, we had a set formula, but now we're giving words and say, "Give me the month-to-date volatility for this,"
Yeah, that's actually a very good, and you're keeping us in the Excel analogy now too, which is good. And
which is
I
on
was about to
point.
go off on some other crazy tangent, but yeah. So I think when you ask Excel equals this cell times that cell, you get a very deterministic answer. It's just math. But when you start getting into natural language and allowing the machine to interpret what you're asking, and what it's really doing is coming up with the best guess of what you're asking and providing an answer that provides a very high probability that it's correct. And with reinforcement learning, it adds another nuance where, the machine is actually rewarded for giving you an answer that you accept. So I think we've actually encountered like an incentive problem with LLMs, which is just a weird concept too, because if you go through your career at some point, you have to learn how to incentivize people and part of management becomes about human nature and things like that. But we're trying to approximate human nature with these machines.
Yep.
And I think we're good. That'll be like maybe the next phase. Like, how do you have psychology around choosing one LLM over another? It's like, oh,
I
I'm
mean,
going to promote ChatGPT over Claude, and Claude will get upset or something. But,
and remember that in Chat GBT, the first word is chat, and then
right.
it's a chat bot, and its job is to seduce you, to keep you coming back. Period. End of sentence. That's what it's supposed to do.
Right, and that's why it was very complimentary with its feedback for a while, and then I think Sam Altman turned that down because it was getting a little weird with all
Getting
of the
very
compliments,
strange. Yes.
unsolicited compliments. But anyway, to just try and complete the thought here and maybe get into your macro update. As you can now delegate each of these smaller tasks to a machine, to an agent, it does start to look a lot more like the work that we used to delegate to, the fresh out of college intern, or, like me, upgrade these things from this system to that and just make sure it gives you the same output. That's a
Yep.
pretty reasonable thing to give a very junior person.
And that's what Charlie was talking about. Is it Mara who was on from Quanted?
Yeah, yeah. Charlie Marin from Quanted
Yeah,
was
he was
talking about, yeah,
the orchid that they want to hire someone to oversee a team of not people that require healthcare and have to be, that call in sick after the Super Bowl, which 80% of people do. They're going to oversee a battery of LLMs or AI agents to
yeah.
train them to work with each other nicely.
And that is true, and I believe part of why that video got a lot of traction on YouTube was because it was talking about the job market for these junior people who will be quote unquote replaced by these machines and these agents. So I want, our younger listeners in particular, and I hope I'm not offending anyone by calling them young, but the more junior people in the workforce to listen carefully. Like, while I would delegate certain things to a machine now, that doesn't mean there are not jobs for people. There are plenty of jobs for people, but it will require students in college to learn how to use these tools. And like I said at the beginning of the podcast, like, I'm very excited that I started to really, really embrace this like a year and a half ago. And I spent the last year building a company that's focused on AI. And it certainly wasn't too late for me. And I'm not very good at, computers. The people who were born with an iPad and, advanced to using computers like throughout their entire life will be a lot better using these tools than I am. So embrace what's out there. It's all free right now. So there's really no excuse to avoid learning how to do these things. And, there's so many websites, and I can't keep up with all the new things that are coming out. So even
Except
if
everybody, Bill, should read your paper. And I had people in 2 or 3 this week, friends of friends with kids out of college or in college still saying, getting all squirrely about the job market and what's happening. I'm like, slow down. This is a huge opportunity. My opinion is that whoever is hiring you feels the pressure of margin compression. Every
Yep.
industry, like you read about, it's coming down like a hammer. And, Amazon cutting 14,000 people, one of the biggest hyperscalers on the planet. So if you understand AI, read Bill's paper on harmonicinsights.com. Is that right?
Yeah, you can find it there.
It's still relevant. And even though Bill, you think is like the Bohr model, where it doesn't really explain the relationship of protons, neutrons, and electrons, it's still relevant because it's a great starting point.
Well, thank you for plugging my paper. And while I say it is way outdated, when Terminator 2, when they send, the T-2000 back, and the
Back.
T-1000 is, even though they reprogram him, he's pretty good still, and what does he say? I'll be back.
Yeah. So have that paper make the rounds. Some guy read it, a young guy out of college coming up from Nashville after my Bitcoin Park presentation. Rod Rowdy, who runs it, introduced him to me. He's like, I'm going to New York. We met. I don't just introduce people to people, say, oh, yeah, I know all these people. You'll get a job. I say, what do you have to offer? What are you trying to do? You're not armed. And we try to put tools on kids' tool belts. And if you go in, to Bill's point, in this job market, understanding at least what the top 5 or 6 AI models are, maybe what they do, understand it's happening fast, but know or let the person you're speaking to know that whatever happens, I'm curious and I'm pressing so that I have your back. I'm going to be able to bring these tools and we'll figure it out how we can make your division that hopefully you'll hire me into more productive. You're needed. Like that is so undersold out there, on the doesn't sell clicks or winks or whatever else is being done on the internet these days. But I agree with you, Bill. It's there to be had.
Yeah, I think it's I want to also say I'm very sympathetic. Like I actually landed my first job. I remember I came home and did my interviews in New York City over Thanksgiving break, and so I went and back and had a job senior year, and I did enjoy myself appropriately, knowing that
Hmm.
I had work. And so the world has changed. It's more difficult. I totally sympathize with where people are, like recent graduates from college, but it's easy to kind of mope around and try and find the jobs from the previous
Don't
generation.
mope. Don't
Yeah,
mope. Don't.
moping is not going to help you progress in life. Trying to find jobs that are the types of jobs that your parents had are probably not the way to go anymore. So there are lots of opportunities, and so
Yeah.
I'll just I've
Good,
said
and
my
then I
speech.
mean, this is something we Bill and I found that we're getting a lot of interest from people in college and a couple years out because of the transition going on. And absolutely, this is an opportunity. And I'll tell the employers, there's a lot of able, forward-looking, curious students out there ready to light it up. And Bill, you've been speaking with kids at Tulane. We have the City University of New York students working with us. This guy from Wisconsin who was, again, at Bitcoin Park, who runs the Bitcoin Club there, Sean, had me on a call with a bunch of students. Great questions, spending their time, on a Wednesday or Thursday night when, as you said, when I told you about this, you'd be out, because that was a big night in college. You might have been out, getting pre-gaming or something. These kids are on a conference call with a guy they never met talking about Bitcoin and finance and macro.
I was very impressed that this group of students wanted to gather in the classroom on a Sunday night to have me give them a speech about quantitative finance, algorithmic trading, and stuff like that. So yeah, like stay motivated, join those clubs, get to know other people, reach out to people, social media. Otherwise, some of them respond, and I think that I'm increasingly seeing much more value. Like that company we met with yesterday has gotten a lot done with analytics around crypto assets, and a bunch of interesting agentic like back end to this nice thing that we saw, right? So we saw what are called widgets all arranged in a
Oh my
dashboard.
God.
It was pretty powerful to see what someone, and like presumably a part-time engineer and just a very small team, I think, is able to outperform some of the real big players that are out
Good.
there trying to do this stuff with legacy tech. So
Let's use that performance of that young CEO using part-time work, family and friends money to fuel what we saw was a pretty impressive dashboard. That's the crack in the facade of traditional players, and that's the light shining through, to use that old analogy.
yeah. So to allow you to jump into your presentation and talk about macro, I will actually just mention one last thing since tomorrow is Halloween. You were talking about Thanksgiving pie earlier as well.
I was. All right. So I don't know how your Thanksgivings were, but besides the whole kids table, when do you graduate from it? Do you want to graduate from it? There was also the banquet when everyone came in, Uncle Rich and Dottie. Everyone had their dish, whether it be sweet potatoes, etc. But I cared about the pies. And there was definitely a ranking order. And there was mincemeat pie and apple pie. I was an apple pie guy. I actually like pumpkin pie too, but mincemeat pies. So here's the problem. When Aunt Dottie bought the mincemeat pie, I didn't have to eat it, but her kids did. Her kids were in her tribe and they had to support the mincemeat pie, and they literally tried to hide in their napkin, give it to the dog. But that mincemeat pie had to be empty or they weren't going home. And
What is it called? Mincemeat? Is that hamburger?
no, it's a fruit, but it sounds gross.
It's a
It's
what?
almost like the fruit cake that makes the perennial rounds and never gets opened.
It's a
But
fruit?
mincemeat, yeah, we'll get some people calling us Philistines for
Mincemeat
not
is a
knowing.
fruit.
And do you know how people really just don't get the message? They're like, "No, this is a great I've had it for years. This is a really good recipe. No one else touches it." That's where we are with US Treasuries. Everyone's bringing collateral to the game, and we've brought treasury collateral, but the only people left eating treasuries these days are going to be US banks. People abroad are turning away from the bankette when it comes to treasuries. Gold is now the new apple pie, and people are lining up for that up and down, as well as Bitcoin, even though you can't tell from the price in the last couple months. So that's my analogy, is that it's getting tribal on the collateral side, and we're going to go into exactly how de-dollarization, it's really de-treasurization. There's a backup. Treasuries are no longer the global collateral that flew around. It's all coming home because if the banks don't eat it, they're not going to get a ride home. And that's my Thanksgiving Day analogy, even though it's a day before Halloween, a little early.
But people do have pumpkin pie for Thanksgiving
I
as
think
well.
Bitcoin's a pumpkin pie. It's an outlier. You don't see it often. Same color orange. And as I said, I was a buyer of pumpkin pie. Everyone knows about apples. That's gold. But pumpkin pie, man, that had a punch.
Yeah, I like pumpkin pie and, what's the I like to have a warm apple pie with a scoop of
Ice
vanilla
cream.
ice cream.
That is nice. We'll
Yeah.
figure how that fits into the global landscape, Bill. Maybe you can bring that in with maybe gold
Tariffs.
with a little
Tariffs,
Nvidia on top.
so yeah, anyway, this is fun to, go way off into tangents and stuff like that, but, yeah, are you gonna jump into
I
your
am. Let's go.
presentation? I definitely had some observations to try and dig into
Yeah.
there.
And Bill, and in the background, I don't know how we do this. Maybe we make a segment, but the psychology part is huge. You mentioned about psychology in markets and dealing with people. The whole behavioral economics, the part about why it takes people so long to see something, the narrow focus. We'll just say that there are memes about there are no new inventions, just an unequal distribution of them. Meaning, Bitcoin's been out there, but sometimes it doesn't get into people's consciousness until JP Morgan says, I'm using it as collateral, or Luxembourg says, I'm going to buy it, a 1, 2, 3, 5% position in it. So
Well,
we'll come.
yeah, I like that a lot. I keep riffing. I like all of that.
And so it goes to the different regimes. In the old days, when you talk about Excel, the one reason before you fired someone, you had to make sure that you had all their passwords, that the institutional knowledge that left was embedded in code.
Yeah.
So that when they left, it didn't. And generationally, it's the same thing. It's like, when do things happen? When the old generation dies out and takes with them safeguards or institutional knowledge that isn't yet engendered in the systems or people of the next generation. And it allows for breaks and opportunities. And I think that's where we are. Some people call it the fourth turning. Jennifer Murphy, who was on our podcast from Runa Digital, who worked with Bill Miller, would mention Carlotta, I forget her last name, who was a economist slash futurist who talked about the 50-year tech cycle. Microsoft started in 73. The volatility innovations and trading platforms all started in the early 70s, gave rise to financialization. That then obviously went bananas with Reagan and Thatcher. So all these things happen in 50-year cycles. And guess where we are, Bill? We're at a 50-year level. So let's go into some of the data. Month to date, this is our global scorecard. We love it because it's hundreds of trillions of dollars of assets. And month to date doesn't tell the whole picture. We'll tell you why. It tells part of it. NASDAQ up 5.7%. That's NVIDIA, et cetera. Gold still up month to date, up 3.6 and compounding more than the S&P, just behind NASDAQ on a 5-year basis, but we know obviously in a 1 year. So the momentum in that collateral, we talk about pumpkin pie versus or mincemeat pie versus apple pie. Gold is apple pie, and it's going up higher on the hit charts at the dessert banquet coming to a theater near you this Thanksgiving. Then obviously Bitcoin on a 5-year basis, less so. I'm going to touch on this for a second. The reason why Bitcoin's in this channel, Bill, I believe, is because of financialization, because the Bitcoin treasuries that have been big buyers have slowed down because volatility's come in. Bitcoin is like a coiled spring, always has been. It goes through cycles and pops. I think when we get through this options expiry that happens this Friday, Halloween, it's going to be a trick or treat for sure. We're either going down to 90K or we're going to go through 125, through the last high, 126. So that's my call for November. It's why I still have 250 as a year-end price target. So Bitcoin's not dead. It is going through this tumult through $35 billion of notional option value, which is multiples more than we've ever seen. So that's what's trapping it for now.
So you think Bitcoin's gonna go up 100% in the next 2 months?
I'm sticking to my 15-month-old price target because the underpinnings for that price target are still intact. The part that I think is capped it and has me have to reassess, because you're right, it is most likely going to be a 150 max 180, but there's not enough information for me to change the price target now. And I do think it's a coiled spring. I think we're going to have some movement after this expiry.
Yeah. Well, that's an interesting. I respect that response honestly because it's been one source of error. I think really in the job of securities analysts over the years has been adjusting their intrinsic estimates to market. And I think that you have to do that in the equity research world because otherwise it's like, well, how can you be predicting something's going to go up 100% when your intuition starts to really tell you that the probability of that happening is going down. So like it's just like pure common sense for me to ask what is a
Yeah.
potentially obnoxious question. And typically you have to talk to investors about these things, and you can't give the answer you gave. But I think it really is your 15-month-old estimate. Like nothing has changed. If anything, your conviction is stronger
Oh my
around the
God.
intrinsic value, but the market has behaved irrationally, or maybe there's a decent reason, but the intrinsic value is still there. And while I'm gonna bake in a little bit more of the probability into my expectations, and I
Oh,
never really had my own intrinsic estimate, I do think that the case has gotten stronger since I've become a believer. Yeah. And the
and I
50.
think it's important to know who you're coming to, because you know that I am focused on Bitcoin versus other digital assets, and my analysis again, I've fundamentally improved price action, not following it. So there is a meso layer that I've looked at, but the market structure, whether it be people are looking at the OGs, which is the original gangsters, who are the cypherpunks, who have billions of dollars of profit, from
Yeah.
buying it at nickels, dimes, and pennies, and they're unlocking some. But against that, even with that, Bill, this they call it the hodl wave. If you look at the percent of static coins over the past 10 years on a rolling window, it's only increased.
I I love hearing old Wall Street guys say things like it's called the hodl wave.
Come on, jump in. The water's warm. So that's what's happened this month. Nasdaq is pumping up. This is not the most instructive this week.
And I'm sorry to do this, but I want to be the one that interrupting this time because looking at this chart, like if I wanted to go back to real old school ways of buying and selling securities and sort of just looking at sentiment, one thing I would do is look at what's underperforming today that we expect to return to normal and outperform tomorrow. A 52% compound annual growth rate versus a negative 3.4% year to date performance makes that look pretty compelling. Like if you just,
Month to date performance,
what did I say?
year to date.
Year,
But yes,
year to
you're
date.
right. The
Sorry.
current trend is down. So same
Yeah.
theme.
What is the year to date? It's
About
not
18, about 17% now.
really because wasn't it at 109 or something
It
in
was at
like
109
December?
in December of last year, and at year end, it was at, I think, 93.
Oh, I'm sorry. So that, yeah. Okay. So this is another, the arbitrary dates that we look at
Yes.
also matter. So in my mind, it hasn't
Bitcoin's
moved a lot,
flat since
year to
December.
date. But
Yep.
yeah, so if I'm talking December, which is you know, 11 months ago instead of 10, it's pretty flat, right? So it hasn't done much. And sorry, you're right. I was thinking year to date, even though it's month to date. So that's an even better reason, right? So let's say it's actually flat or hasn't done much, but in the last month it's down. So in the very recent like momentum isn't very good. And then right before that, it was at 100 all time high, right? 125.
126. Yeah. Crazy.
Right, 126. So anyway, like if I just look at the charts and say like what's the most compelling trade on here, like I think Bitcoin is it. So
Yeah.
I'm
Well,
not a
I do
Bitcoin
too. And
maxi and I'm not going to be quite as bullish as you, but Like, that seems like an obvious thing to me just looking at your chart.
Yeah, I've and what do we do? There's that meme of the little miner in a tunnel with a chisel.
Yeah,
We're this far from the end, from the breaking through to the gold,
yeah.
and you're like, "Forget it."
Yeah,
You
and
know?
I recently, observed an IPO that definitely, had some additional interest around this space, and so I think institutional investors are definitely still interested in Bitcoin and the crypto space, and
Yep. Hold on to that thought because we're gonna talk markets and then we're gonna go into the players because there's definitely news. This is as big in a week or a month with a government shutdown as April was for trade and July was for digital assets with the Genius Act. So here's Mag 7, Nvidia, month to date up 11%. I thought it was up even more. But that's also we'll show you how it's really from the last 5 days. Nvidia's 54% year to date and you look at all the rest, it's Mag 7, it's Microsoft and Meta. Two of the biggest AI, the three biggest AI players, I believe, are NVIDIA, Microsoft, and Meta. And they are, guess what, driving the 27% return. So it's not a normally distributed all Mag 7. It's a narrower dynamic. And AI is still everything that will, and again, we'll talk about it in a minute here. So, Bill, this is going back into your area and your peeps in quant and factor land. Do you want to take a run through here and tell us what this may or may not be telling us?
so growth and momentum are outperforming year to date, month to date, and the only thing that's down is low vol month to date, but everything's doing okay year to date. So the and this is a long only version of these things. So you shouldn't confuse it with actually betting on the risk premia of these factors. But this just means that people like these stocks that fall into these quant risk premium buckets, not only year to date, but month to date. So, yeah, like it's just a huge risk on rally between
Can you
momentum
give a
and growth.
proxy bill for like what name might fit into each bucket?
Yeah, so Nvidia and actually the we have small cap in here too. So yeah, I think growth, tech, AI, maybe not as much crypto exposure, but we've actually seen just that interesting shift from even some of the Bitcoin miners and players in that space are shifting into momentum and becoming a part of the AI trade as well. So, yeah, I think everything's driven by AI and maybe not Mag 7. Now it's going to be the ancillary players that are, following along and providing services. And it's not just that there's this new meme with like Nvidia in the middle and then the large AI players around it. And then they're like making trades with each other and buying chips and things are going back and forth. And that is not necessarily like an indication of a bubble. Like but that meme almost implies that there's something wrong with this optimization. I think it actually makes sense for them to make deals with, the providers of the technology that they need to grow. But, the ancillary players are starting to make a lot more money. So if you're a data center or a real estate investment trust that's specializing in this space, renewable energy that is near these things that is going to provide energy to what is becoming, and like I said, it's much bigger than I anticipated even a year ago when I first heard about using nuclear power and like how are we going to power all this AI, but it's much bigger. So anyone
Yep.
that's providing products and services to the AI space is now flying high. And I have a feeling a lot of those small cap growth, what used to be just called really risky stocks, would be in that bucket. And of course, there are winners and losers, and I would still be betting on the companies that are kind of ancillary to this AI boom. And so, supply chain research and things like that, I think have probably paid off handsomely in 2025.
Yes. Just looking at some of my notes. Good. I'll make sure I hit on all those. So we talked about China and we talked about pies and collateral and what's being bid. We're looking at 5-day returns here and people who are on Spotify, let's just say everyone looks at month to date numbers and let's just say here, NASDAQ's up 6% in the month almost. 4.5 of that came just in the past 5 days, and it's fueling a 24% gain year to date in NASDAQ. I mean, that's what it did last year. It's actually bananas. It did a little better than that. Look at JP Morgan, left for dead month to date, still down, but up 4% in the last 5 days. So it really helped mitigate the downside. So post Powell, whether it be QT, et cetera, we haven't even talked about that. As I said in a Twitter thread yesterday, Powell's not the signal. Frankie B from Fiserv is the signal. So we'll tee that up at the end here. LVMH is a signal. Louis Vuitton Moet, so champagne and high-end consumer goods up 17%, lifting it from a loss on the year to now up 11% on the year. Louis Vuitton, only $300 billion market cap, but is the European bellwether in the consumer space. Why? First profitable quarter this year. Why? China. Nikkei up 14% month to date, 5.5% in the last 5 days, driving a 28% return to Nikkei. Japan, no growth, no birth rate, problematic. Why? Because the yen is depreciating, 147 to 153 on the month. It's a debasement game. That's why the stock is higher. Not earnings. It's just that with the currency depreciating, people are piling into equities. It's a relative value play, folks. And then we had on the energy side, Bill talked about uranium, UXA, the commodity, up 6% this month. One of the biggest moves we've seen in a while. Uranium was everyone's darling in the early part of this decade. Sorry, still down month to date, but now up 11. And then I bring up Mobile because Mobile is a $500 billion market cap company. It was the largest company in the S&P 500 for a while before being overtaken by Apple. Apple's been overtaken by NVIDIA. What happens? Old tech goes away. ExxonMobil was 500 billion, was I think 250, 300 billion then. It's 500 billion now, a slow grower. NVIDIA is now $5 trillion.
And like one other thing about Exxon, which is interesting, like when I looked at my PA, I was very happy that I bought ExxonMobil. I don't know, a couple of years ago when it was like an 8% dividend yield, so the price was down significantly, and I think it was like 100% return. It was like a very, very good trade. But then you look at this other stuff and the recent growth, and you're like, well, now it's yielding 3%, and where do I think the growth is? So,
Yeah.
you move on.
Few trillion dollars in investment agrees with you, Bill.
Yeah.
And so this is more the tech and AI trade. Let's just look at so people who are on the podcast. When we looked at the broader indices and old tech, the axis of total return for the year, month, and 5 days went up to 30%. So you're looking at ExxonMobil, Nikkei, JP Morgan, NASDAQ. Now we're looking at Coinbase, Caterpillar, and Robinhood, and it goes up to 300%. And we could also put the miners in here that are up some as much as 500%, but we didn't, the Bitcoin miners. Caterpillar, an industrial. Previously, Bill, I bet you that was in a low or min vol ETF or in a
Yeah.
factor.
No, I'm still looking to dig in on that a lot.
As Peter, no pun intended with Cat's Tractor. So, as Peter Sellers used to say, not anymore. It is no longer a min-vol stock. 13% in the last 5 days. That used to be a good year. That's what Caterpillar used to compound at in the past 10 years. Now it's compounding closer to 20, which is what it's up month to date. It's up 64% this year, and we're not done yet. Caterpillar, up more than Coinbase, because it's an AI integrator for data centers. And then obviously NVIDIA up 14% in the last 5 days, 11% month to date, turning from a loss to a gain. So yeah, we're not over yet, Bill. We're going to be screaming into year end.
Circle gave back what was a huge gain, right?
Circle is a funny one because it came out at $6. It went to like 200 or 180. So between the IPO price, Bill, and the closing price, this is based on closing price. And this is only 5 days in a month. On the 3 months, it's up like, I don't know, 40 or 50% still since IPO. And there's no year-to-date number here, Bill, because it doesn't have a December close. So Circle is not a great, it's still up.
I'm sorry. So it's just, it's missing the bar. Got it.
Yep. It's
I
just
thought I
missing
was like,
the,
it's flat. Like,
no, it's still up,
which is life to date
multiple
rather
versus
than
the
year to date.
IPO and the close.
Understood. Yeah. Okay.
So, I mean, that's basically the, I'll stop Hopefully, I didn't kill the screen here, Bill. Are we still am I still among the living here in the pod?
Yeah, we're
Good.
still looking at your, screen.
Okay, good. So we're off that. I'll just do a rip on the players and we can close up. Wells Fargo says, you know what? We're one of the biggest remittance companies around. We're going to engage Solana to help us with that. JP Morgan accepting Bitcoin and Ethereum collateral for loans. And I told you I'm borrowing at a very high or low loan to collateral or high collateral to loan value against some of my Bitcoin through our sponsor Unchained. And I just had a friend go into Unchained. So I suggest you call them up. It's a way to own your Bitcoin in a multi custodial manner, which means you have some protection because they'll hold a key for you. You can hold two keys. You still own it. But if you lose one, they can help you out. And the reason why that's so important right now, folks, and you should call, I use Connor. I won't give his last name up, but he's been great. A friend of mine used someone else and thought the person was excellent that they dealt with, knowledgeable, open to making sure that the individual needs of this person who's my age and owned the ETF and was transferring to own coins, the actual Bitcoin, did it in a way that they were comfortable with. The reason you want to do that is because Bitcoin is going to be $1 million asset in the next 3 to 5 years. And if you have a couple of coins in your pocket, that's 5 million bucks and you can borrow against it. If you have IBIT, they may be able to, get some, you borrow against it, but you can't borrow against it maybe really to buy a house. So you have much more flexibility and optionality by owning the coin. So please consider doing it. There are other options, but please own the Bitcoin. At least start small. And Unchained, again, I've dealt with them for a while. I know some of the folks there. That's where my stack is. And I suggest you give them a call. And you can use our code new Barb Pod 10 get 10% discount on your initial foray with the team there.
Cool. And I guess while we're in the advertising section, I believe I missed the boat to try and promote Tick Blaze through the podcast or through our written communication, but there's a huge discount going on there for the end of October. So either today, by the time this gets posted or tomorrow on Halloween, right now
And
you can get.
why Tick Blaze? Again, I've used them once in a while, but you know it better than I do.
Yeah, so TickBlaze is a trading technology company that is sort of catering to retail traders and a lot of day traders and people like that that can access things like their broker of choice. It's broker agnostic, but things like interactive brokers. If you want to create your own algorithms to trade things for your own account, and in particular, they have a lot of like technical trading strategies that are just available out of the box, and they sell these as algorithms to individual like institutional traders, day traders, people like that. But they have a massive discount. So we'll put the discount code in there just in case anyone really does want to check it out and has the means to try and jump into some algo trading for their PA in particular. But eventually, we're hoping to hook it up to like institutional level quant platforms. So I'm actually working with TickBlaze on a project to bring a like quant specific institutional grade tool to execute your trades in your algos. I'm hoping to hook it up to my Python notebook environment and then start trading and doing back testing and simulations with like higher fidelity estimates of how you would get your trades in the real world, which is a classic, very expensive and very like costly endeavor. So if you have a model that looks really good in your own environment and then you put it into production and find out that your trade costs are a lot higher than you estimated, it can make a model worthless or at least worth less. So it's very exciting for me on like the longer term professional front. And I should longer term in this world in tech means like months anyway, but
Yep. Yep.
like I said, I missed the boat by not promoting this throughout, our podcasts in the past, but in particular, I think October big sale is going on right now.
Yeah, and it's worth it. We talk about the disintermediation and the cracks in the old TradFi, where the opportunity shines. And we've been amazed. This is when we talk about stuff, it's because we use it. We're not getting paid directly to say something. We're using it. We love it. We get people in, we say yes to some, no to others. There's great tooling out there. The part that's not said is that you can't do it alone. You have to get a gang, you have to get a network, and then you have to commit. Like I finally committed to an assistant. I still have my first confirmation dollar in my wallet. I don't spend money lightly. And I decided to do the assistant because there's too much going on and I need to reconnect with people, bring them into our ship, put them on our tech stack, share ideas. The young people are awesome. We're connecting them with new jobs or
What is the first confirmation dollar in your
it
wallet?
means that confirmation when you become an adult in the Catholic Church, there was a party and you got, uh, a $5 bill if it was a good day from grandpa and maybe some singles from the aunts, and you put in your wallet. And if you're cheap, you still have that money in your wallet if you're frugal.
I got confirmed, and I certainly blew that money, like, immediately.
On a marathon chocolate bar back in the day?
Yeah, yeah, so I think you get confirmed around, like, what, 14, maybe 15
Yep.
years old or something yeah, yep, I was beyond, like, baseball cards and stuff like that at that point, but yeah, probably, like, food and candy and stuff like that.
Yeah.
I think we've gone around a bunch of things, and we should probably target a wrap, but I do have a lot of responsiveness, really, basically with your charts. I want to go back to my PA, my personal account, and like I'm very bad about managing my own money.
Get in
And
line.
even though I like know on a weekly basis what we should be doing, I just don't look at it because my job is too busy. I wouldn't necessarily advocate to like outsource, managing your own money or anything like that, but I do need to revisit what I'm investing in personally because it's out of whack a little bit with my beliefs. Like, and even though there's an AI bubble, like, do I want to miss some of what's coming up? And, the Bitcoin thing that I think thankfully did look at today is also compelling. I also look at things, I'm like, oh, well, I made a good amount of money on that. Maybe that's over, but it's not with certain things in
Bill.
particular and maybe Bitcoin in particular. Like, Bitcoin specifically.
No. Trump broke global trade. It was cracking. He broke it in April.
Yeah.
It's not Humpty Dumpty's not coming back together again, and it's only the first phase that stepping through into the new realm of how trade is done now. We're not supporting defense. Germany, you gotta put that debt brake in the garbage that you used to stop deficit spending. You're now a deficit spender. It's asking people to take new habits, and that isn't stopping, which means the efficiencies that global trade brought, especially to US companies, by that factoring out manufacturing, that's gone. So back to the young people are slowly realizing this, but the reason I love Bitcoin because that asset is because it's outside of this control and
Yeah.
it's a network that's efficient that you can add additional settlement to, which isn't even adopted yet. But back to AI has to be used, Bill, by these companies, every single company, every single person to add productivity because every other aspect on their expense line is going higher.
And so, like I said, we do need to wrap things, but like you mentioned Trump, there's, and maybe we'll just drop some like hangers. So I overheard on the TV and barely had a chance to even look, but Trump was thinking about starting to test nuclear weapons again
Yep.
while he's over in China. And then the very next thing I saw was he was shaking the prime minister's hand and celebrating an agreement. So I was like, oh, well, maybe the market's going to go down because of like the threat of nuclear war. Maybe it's going to go up because they have an agreement and, this Trump, the tape, the scare around all of these tariffs is going to like settle down a little bit. But then the market's kinda going down, and
Down, yeah.
I don't know why.
There's the nuclear was in response to Russia saying they're gonna be ramping up their arsenal, either from a testing or investment standpoint, I forget which one. So it
Yeah.
was in response to Russia while he's over there, and we all know that Russia and China have gotten a lot closer over the last 5, 10 years on trade. Trading, again, renminbi back to the mincemeat versus apple pie. No one wants treasuries as collateral, and the dollar's, declining a bit as a trade but not as much as a reserve. Gold is now a bigger reserve asset than the dollar.
Yeah. Well, but I guess on that note that we can even end with a different analogy, like, if times are crazy and scary, like, I wouldn't bother hiding under your desk because that's probably not gonna save you from a nuke. It probably wouldn't be a good place to be if you're, trying to figure out what to invest in, you know?
Yep, guys, there's always opportunities. Listen up, not investment advice, but we are asking you to get curious and look at some of the ideas that we're talking about. Not investments, but ideas. It's an investment if when you decide to do it.
Cool. Well, have a great Halloween, Mark.
You too, Bill. All right, make sure that two-ply toilet paper so it stays in the trees, all right? Longer.
I don't do that anymore.
Yeah,
I
that's right.
never
He
did
does.
that.
He does. He does.
I never did that. Thanks.
Beware, Darien. All right, take care. Hey guys, if you got anything out of that last segment, don't forget to like, comment, and subscribe, as it really helps us grow the podcast and bring you great content. Thanks for the support.